If you're not sure about candlesticks, there is a full section in the beginners section. So even if you've been trading for a while and you need a bit of a refresher, then if you have a look in the beginners section, there are a lot of videos in there explaining about candlesticks. Now with candlesticks, there are hundreds and hundreds of patterns. There are hundreds of books. There is even an online university course that last time I looked will cost you $3,000. I use about 10 maximum, and basically what I'm looking for is turning points in the market. I don't trade tops and bottoms per se, but along with support and resistance and other indicators, candlesticks can often give you the first clue as to where price is going to go next. As with all indicators, they have more value the greater the time frame. So for example, a candlestick on a daily chart is far more important to me than one on a 15-minute chart. What I'm going to do is just go through the important ones that I consider to be important and then show you on a live chart some examples of these patterns. This first pattern is called a hammer pattern or a pin bar candle, and sometimes they have Japanese names as well, and I for the life of me can't remember, but it's not important. The important thing with a hammer pattern or a pin bar is that it is often a sign of a reversal in price. And what you need to know is that the wick, the body, the shadow, whichever phrase you've learned, has to be at least twice the size of the body of the candle. If you find it this shape at the bottom of a move, then it suggests a reversal back up and vice versa. This next candlestick pattern is called a doji. And once again, there are lots of variations on this. You can have it whereby there is no body whatsoever. Sometimes it's a slightly bigger body, which is known as a spinning top. But this candle and this kind of candle signifies indecision. So if we get to the top or the bottom of a move and we start to see dojis or candles with big wicks and small bodies, then that is a clear indication of indecision, and we then start looking for clues for where price is going to go next. This is a good example of indecision at the top of a move. So we've had a bullish candle. Usually we look for these kind of moves at the top or the bottom of fairly decent sized moves. But in a simplistic level, we've had a green candle, which is a bullish candle. Price has come up to the top and started to stall. We then start to look for a completion of the move with a red candle or a turn back down. But this is the first clue that price is stalling and that the market and traders cannot make up their minds where to go next. And the reverse, of course, this is a bullish doji. At the end of a down move, we will be looking for indecision at the bottom of the move and then for further clues for a return back up. This pattern is known as a shooting star. Now it's more important to me when we get another red candle, which then gives some confirmation for a move back down. But once again, this is a sign of indecision or a turning point at the top of a big move. And once again, a reverse, and as I said to you earlier, I prefer it when we have a candle of an opposite colour. So price has come down, we've had the doji candle in the middle, and we then have a candle going the other way. You then start looking for longs. Now, I just showed you prior to this a doji star, and as I explained to you, I prefer it when we have a red candle going down, and there's also benefits if this candle opens higher than the close of this one and lots of other things. But that's the basic pattern. You're looking for this shape at the top of a move, and when we look to take trades, we place our stop above the highest point, and as I said, we're then looking for clues for reasons to short. This is a variation on a theme. This is what's known as a harami candlestick formation. I know this more simply as an inside bar. We've had an upwards movement. This candle body has been completely engulfed by the preceding one, and therefore it gives us a clue that price is likely to turn back down again. On the flip side, of course, this is a bullish engulfing candle. So price has come down. The body of this candle, the wicks are unimportant. What is important is that the body of this candle completely engulfs the body of the previous candle, and therefore after a move down we get this move. We're looking for a move up, and once again the stop would be beyond the low point. The final pattern that I concentrate on is sometimes known as Tram Tracks, spinning tops. There's lots and lots of names for all of these candle patterns. But once again, if we've had a big move up and we have an identical candle to the right of a green candle, or vice versa, in a down move, if we have an opposite colour going back up, this again is an indication that price is going to change direction. I've just shown you an ideal scenario with these different candle movements. This is a perfect example of a candle pattern where we have the green candle, the indecision candle, and then followed by a different colour. But often what you will find in the real world is that we often have a number of indecision candles at the top of a move, but they are still valid. So you don't tie yourself just to this kind of movement. Allow for the fact that these clues could go on for days if we're talking about a daily chart, and don't be in a rush to discount it because there's too many candles of indecision. Here are some recent moves on the British pound, and we can see at the top of a move up here we had a perfect example of a reversal candle. Stop just above the wick of this candle would have kept you in, and this was a major move down for many hundreds of pips. We then look down at the bottom, we follow the movement until we come to another one. Brilliant, this is so easy. Stop just below the wick. Once again, many hundreds of pips worth of movement. And we then have another one, yet another. This is my favourite candlestick formation, but unfortunately, as with anything in Forex, it doesn't work all of the time. For example, we have a situation down here. We'd had a move down. We then got a bounce back up again. This is a pin bar reversal candle. It's not perfect because ideally it wanted to be down here. But had we taken this trade purely from candlesticks, the wick would have been here, and a couple of days later we would have been taken out here. So you can't just use candlesticks for trades, but they do give big clues, and you can particularly use these for longer time frames. So if you can only trade, for example, of daily charts, then get in the habit of understanding and looking closely at the candlesticks. Also on this chart we have an example of an engulfing candle. Let's make this a little bigger, and as you can see, the body of this candle engulfs completely the body of the previous candle. Sure indication the price is likely to turn back down again. Here we have the bottom of a down move. We have another spinning top Doji type of candle, which is a clue that price is going to go back up, a clue that price is going to go back down. So lots of times on daily charts as well as on shorter time frames, the candles will give you a clue as to where price is going to go next. Here we have an example of Tram Tracks, where this candle is virtually the same as that one, yet another indication of price turning down, followed by what's known as a gravestone Doji candle, again suggesting a move back down. Here you have the Doji suggesting indecision, again a possible move back up. So they are all over the place. Again, another hanging man, pin bar reversal candle, lots and lots of opportunities. I strongly recommend that you concentrate at least on these candlesticks that I've shown you in this video, and look for live examples on charts for yourself, and get in the habit of making a note of candlesticks, especially if you're trading off longer time frames. On to the next subject.